Yes, I'm John Love, and I'm glad to be here. I love small businesses. I love small business owners. I'm one. I've been one for years, and I wouldn't do it any other way. I couldn't survive in corporate America. I probably could, but I don't want to. So if we'll jump right into it. By the way, this is informal. If you have any questions about anything that I say, stop me and I'll be happy to go over it a little bit. So I am an accountant. I'm not a CPA. I have an economics degree. By trade, I'm a wealth management advisor. And my card is on the tables, and it does say Love Wealth Management. But the company that I also own, I inherited from my mother, is called Paperworks. And we do bookkeeping, accounting, tax preparation, QuickBooks training. As a matter of fact, I was just reminiscing with Linda that we were the first in the Permian Basin to do QuickBooks training back in 2008. So I've been doing this for 2006. So I didn't bring any Paperworks cards, but Paperworks is the name of my accounting and tax preparation company. Graduated from the University of Texas at Permian Basin. Actually started out at UT Austin, had too much fun, partied too hard, came back home and graduated. Again, I'm a wealth management advisor. I'm a former city council man of Midland, and I provided accounting for many businesses. So if you have a business, as a matter of fact, how many already have a business? Okay, and how many are thinking about starting a business? Okay, very good. This class is going to be for both of you guys. So again, if you're having questions, just jump right in. And of course, I'm the owner of Paperworks. Services I provide, I think I said this, but I do preparation of personal taxes, small businesses, and self-employed workers, which is what Alfredo was referring to earlier. I give advice and help register new businesses with the IRS, Texas Secretary of State, and Texas Comptroller. And also provide notary public services. I used to be a notary, but I let it lapse, so I do have someone in my office that does that. And of course, accounting, and I do give business advice. A lot of people would come to my mom for years and get business advice, and I would listen and kind of glean all that information and be able to use it in my own experience and also with clients. And no legal advice is going to be given here. I am not a lawyer, so please don't think that I am giving you legal advice. If you do need legal advice, you definitely need to consult a lawyer. I say that specifically because I do help clients set up LLCs with the Texas Secretary of State, but I just do paperwork. I don't provide legal advice. Okay, objectives of this course. You will learn to identify deductions to reduce your base income for taxes. You're going to learn tips on how to make and maintain accounting records, and of course, Linda will help me with that. What are estimated taxes? Alfredo said earlier, if you got a 1099 NEC, they're going to tax you on your profit. Well, guess what else they would do? They're going to penalize you for not paying self-employment taxes, right? Which a lot of people aren't aware of and don't know about. How to avoid problems with the IRS, and then we're going to give you some business resources in Midland at the end that can help you out. And of course, one of them is right here, that lady standing right there. So let's get some basic definitions down. Gross income, it's the total amount of income received in a fiscal year. Fiscal years are usually from January 1st to December 31st. Your Fortune 500 companies and most governments go from October 1st all the way through September 30th. But most small business owners, I recommend you just do just a regular calendar year as your fiscal year. Profits or earnings, also called net income, is the difference resulting from the gross income that you make minus business or any work expenses that you have. This is the profit. This profit, is the basis on which taxes are paid according to rates established by the IRS. Now, this is really simple, but you'd be amazed at how often business owners forget this simple concept, right? So again, what you pay tax on is only your profit, not your gross income, and that's very, very important. As the taxpayer, of course, is the person who has the responsibility to pay the taxes as a result of the income or profit that is earned or obtained. The tax rates paid are variable and have to do with earnings and the taxpayer's status, whether you're single, married filing jointly, married filing separately, head of family, or a qualified widow. So just to give you an example, your total gross income for your business, now this is whether you're a dispatcher or whether you are driving trucks or whether or not you actually have a store and you're selling goods. Your total gross income less the total business or work expenses, in this case $30,000, $50,000 for the income, equals the profit, $20,000, and then that is what you would pay federal taxes on that $20,000. The key, excuse me, is as a business trying to reduce this number so that you don't have to pay as much tax.
As long as you reinvest your profit, you don't have to pay taxes on it, will you?
That is not correct. In certain circumstances it is. So for research and development, they do give you tax credits for that, but if you just made profit and you're just reinvesting it into the ownership, no. But if you take that money and continue to buy things that you need for your business, reinvesting, then yes, that is tax deductible. Okay, and that's a valid expense. Yes, sir.
Does that $20,000 profit, which is taxable, does that still fall under the same grading, like tax brackets, as you go up with that, or is it different for the business?
So for business, very good question. The tax cut that they had in 2017, which took place in 2018, they changed the tax code for individuals, but they also changed them for corporations. So most small business owners are taxed as either individuals or as partners. So you're going to, depending on what income, what's your share of the profit, where you fall in the tax bracket, that's what you'll be taxed. Corporations, the tax bracket is ridiculously low at 21%. It used to be 35, but they cut it, now it's 21%. Rumors is it's gonna go back up. Yeah. Excuse me, this plays a lot into whether or not you want to be taxed as a corporation or whether or not you want to be taxed as an individual. And there are different advantages and disadvantages to each. I recommend you consult a tax advisor who can help you make that decision. Yes, ma'am.
So, for anybody that only has a business, let's say they want to buy a house, which number do they use for?
Very good question. Oh my God, that's a great question. So a lot of contract laborers, one-person operations, received a 1099 NEC. You get that money and it says you made $50,000, right? The IRS is going to say, okay, well, we want to tax that. No, wait, hold up. I've got all these business expenses, so you whittle that down, right, through your business expenses, and then your true profit shows at $20,000, and that's what you pay taxes on. However, when you go to buy a loan, when you go to buy a house to get a loan or any other major purchase, this can actually work to your disadvantage because your true income is this amount right here, even though they paid you this amount here. So this is a reason why, and I'll get into that, I think later in the slide, about why it's important to pay yourself as a business owner, even if it's just a little bit of money. Real quick, one reason, main reason, is because the hard work that you do as a business owner, that should be considered business expense. Right? You're working in the business, you're setting it up, you're doing things to make it succeed. If you don't count that as, if you don't pay yourself as either a contract laborer or as an employee, then the hard work you do is not going to be deducted from your income. What most small business owners do is they do everything else except pay themselves. And then what they do is, whatever's left over, they start to pay rent and pay bills and do all this other stuff. That's a bad move. The reason why is because you are working for your profit. Okay? The hard work that you do in your business is coming out of here when it should be up here. Does that make sense? So you guys are way ahead of a whole lot of business owners, because most business owners do not understand this concept. If you talk to most people who own a small business, they will tell you they don't pay themselves a salary. They just, live out of the account. Bad move. Very, very bad move. Yes, ma'am.
If you pay yourself a salary though, as the payee, don't you have to pay taxes on that?
Yes, you do. Now we're starting to get into how you're organized, whether you're a corporation or whether you are a sole proprietor or a partnership. But yes, you are going to pay taxes on that, but your position is going to be a whole lot better than working for your profit. Okay? Because your profit as a business owner, your profit is yours to keep, right? So you can do what you want with that. You can give yourself a dividend. You can go out and reinvest it into your company. But if you just take the profit, then it's not a business expense that you can deduct from the IRS. Okay? Yes, ma'am.
So meaning that you can be the employer and the employee at the same time in this case without getting in trouble?
I am an employee of Love Wealth Management, LLC. I'm also a owner of Love Wealth Management, LLC.
Basically, you can employ yourself to work on your business and get paid for. So when you get paid for, the amount of money that you choose is something that it's rational, or the government look at like, accountant make this much a year. Why this dude is getting this much a year?
So I think you're talking about a lot of things. You want to pay yourself something that's reasonable, something that's not necessarily excessive. And there's actually standards that the IRS has, but you want to really pay yourself if you had to get somebody else to do that job, what would you pay that person? That's what you should consider paying yourself. Now I know as a new business owner, you may not have that revenue coming in to pay yourself immediately. Pay yourself $100. Pay yourself something and put it on your books as a business expense, as opposed to taking that $100 away from your profit. Okay?
Can I say one thing,
Please
John?
do. Yes, ma'am.
You notice John said LLC. An LLC is a limited liability corporation. He is not a sole proprietor.
Yes.
If you are a sole proprietor, I think it has an important morale value for any other employees of the business to say, aha, see, he's making so much. He's not rolling in the dough. And my pay is fair compared to what he has to do to make this business go. So that even though if you're a sole proprietor, you're going from the left pocket to the right pocket, it's important to show your employees, should you have any.
So in addition to employees, it's also important to document things for the federal government. It's extremely important to make sure that you document. And as we go through this class, you'll see some of the things that I'm talking about that you want to make sure that you document so that you don't get in trouble. Yes, sir.
Yeah, speaking of documentation, for you personally and your company, do you keep paper records, or are you all digital for all everything?
All
I
digital.
love you guys, man. You guys are asking great, great questions. You're a little ahead of me, but yes, I do everything digital, and I'll talk about that in a little bit. We're going to talk about accounting records and how to keep them. Just real quick, I scan everything. I keep no paper. As a matter of fact, if I have some paper in my office and it has writing on it, I do not put it in the trash can. I shred everything. I scan and I shred. Scan to keep it long term, and I have it in the cloud. I use Microsoft OneDrive. And I shred it to prevent dumpster divers from going out to the dumpster and trying to steal my identity or my client's identity. So I take security extremely, extremely seriously, because there's a lot of crooks out there. Yes,
So
ma'am.
you said you pay yourself as a contractor, so do you do a 1099 for yourself and your own payroll?
So I say you can do that, and there are some times in which that is appropriate, Not wanting to get into much into the weeds, I pay myself for salary and take out FICA, Medicare, Social Security, all the withholdings. But if I do something special, like, for example, I own the building that my office is in. I own it, not my company. So I rent that building to my company. So I get a 1099 from my company for rental. It's not a 1099 NEC, it's a 1099 dividend, is what it is. Now, you can only do that if you're an LLC. If you're a sole proprietor, you can't do that. Or, excuse me, you can only do that if you're taxed like a corporation. No, you can do it as an LLC, whether you're taxed as a corporation or not.
You
So-
can do it as a partnership.
Yes.
What it does do, however, is shield that rental money from Social Security taxes.
Yes, yes, that
And you've
does.
got taxes on the building, tax, insurance on the building, I mean, it's legitimate.
Yes, ma'am, yes, that definitely.
You know, no problem with that. But it's just one other way to arrange matters.
Yes.
And that's why you need tax help, man.
Yes, yes. So just continuing on, here's some identification of expenses that can be deducted from your gross income. Obviously, any materials or these are direct costs. Any materials or supplies that you use for your business, any products for sale, if you buy hair gel and then you resell it to your clients, what you purchased it for is deductible. And then there's what I'll call investment expenses, not investments in stocks, bonds, mutual funds, but like you were suggesting, investing into your company, and that would be equipment, including vehicles, cost of equipment, vehicles, insurance, diesel, or gasoline, parts to keep all that running. Any repairs or maintenance that need to be done to equipment, vehicles, or your location of where you are working, including your house. If you work outside of if you work out of your home and you need to repair something that directly or indirectly affects your businesses, it's a different deduction, but you can deduct it. And then, of course, any tools that you might have to use to operate. Okay, so vehicles, miles driven in a fiscal year. Note the equipment may be deductible via depreciation, total cost of the year in which it is purchased or put into service, or in an annual percentages according to the type of property and the years of life of the property. Basically, you can deduct your vehicle, if you use it in business, kind of three different ways. You can depreciate it, or you can do the total cost in the year in which it was purchased, okay, everything you paid for it, or when you put it in service, or in an annual percentage according to the type of property. Now, I started out by saying vehicles, but this also includes buildings. And so that last sentence, the type of property and the years of the life of the property, comes to buildings. I told you I own my building. I get a 1099 from my company. When I file my taxes, I do count that income coming in on my personal taxes, but what I do is I then depreciate that house. And I think it's 27.5 years is what you can depreciate a structure. Depreciation is just a fancy word that says I have this huge giant expense that I'm using in my business, right? I went out and bought a tractor. It cost me $50,000, but I'm going to use this tractor for the next 5 years. So does it make sense to attribute that cost in the first year when I bought it? It might not. For tax purposes, the government will let you spread that expense over the next 5 years. Okay? That's what depreciation is. Simple and plain. Everybody got that? Good. All right, other expenses that you may incur, salaries are paid to your employees, tax withholding, you send them W-2s. Does anybody have any employees? Nobody has any employees. Okay, you may graduate to have some employees, so I'll share some information about that with you. Any subcontractors, these are people who do not specifically work for you. Subcontractors or laborers receive a 1099 NEC. Just a quick note, a lot of people want to get around paying the Social Security, the Medicare, and all that, the payroll taxes that go along with payroll. So what they'll do is they'll say, I'll hire you as a contract laborer. As a business owner, you have to be extremely careful. The IRS does not play. Now, they are really slow, and they may not catch on for 3 or 4 years, because I've seen it happen, but they do not play around. They've been cracking down on what people have been trying to do with avoiding payroll taxes by hiring somebody and calling them a contract laborer, giving them all the money and not taking any taxes out. And then the burden is on that person. That person would receive a 1099 NEC. They're not a contract laborer if you require them to come in at a certain time and leave at a certain time. And that's a big mistake. So I want to scare you just a little bit. You got to be careful with this. You got to. If you hire somebody as a contract laborer, then let them do that job that you hire them for whenever they want. Go one step better, actually get a contract. Doesn't have to be by a lawyer or fancy. You can just say, I, John, hired Joe to paint my house for X amount of dollars. Both of you sign it, go to the extra link, maybe get it notarized. It can be literally that simple. If you have a contract, that's proof that that person is a contract laborer. But what most people do is they hire somebody, they pay them that way, and then years down the road, the IRS does an audit and they subpoena your records, and they see that you've been paying this person as a contract laborer, but really you've been treating them as an employee. So guess what the IRS will do? Not only will they make you go back and pay the 7.5% as an employer that they're supposed to pay for payroll taxes for as many years as they catch you. I think they can go back 7 years. Not only will they make you pay your share, but they will make you pay the share from the employee that you were supposed to take the money from. That you do not want to have happen to you. I have seen it. It is a nightmare, and it is a lot of money. And I will tell you, there are a lot of people who want to just, hey, just, pay me as a contractor, or they want to be paid under the table is the phrase. Don't do it. Because when you pay someone as a contract laborer or under the table, or you pay them cash, you are in effect paying their taxes for them. Finishing up, payroll taxes, which is what I talked about, those are deductible. Taxes paid to the state. In other words, if you sell items and you have to pay sales tax, you can deduct it from your federal taxes, but same thing what I said about the IRS. The other organization that you do not want to mess with is the Texas Controller. They're the only two businesses who can shut your business down, freeze your bank accounts, padlock your doors. Only two. Don't play with the IRS. Don't play with the Texas Comptroller. If you're collecting sales tax, definitely make sure that you pay it. If you're supposed to collect sales tax, collect it and then pay it. Here's the thing, usually if you sell something to someone, generally you're going to pay sales tax. If you're performing a service for someone, generally you don't have to pay sales tax. My favorite example is a mechanic. A mechanic is going to buy brakes and struts and all this stuff for you, and he's going to sell it to you, and then he has to charge sales tax for the brakes, the struts, and all those things. But the actual labor that he does to put them on and fix your car is not taxable. Okay? Everybody understand that distinction? Okay. And then of course accounting and payroll. So if you pay someone to do your accounting, it's called professional services, legal advice, accounting, tax preparation, all of that is tax deductible as well as business expense. Marketing and advertising are also deductible. Any bad debts that you have or that someone has not paid you what they were supposed to pay, or you did a service for them and they just kind of welched out, you can deduct any of those bad debts. Bank charges, account management, and NSF fees. If you have, I know small business owners, even seasoned business owners, Sometimes have cash flow, and we're not expecting something to hit our account or whatever, and it does, and we get a non-sufficient funds charge. That is deductible, along with any other bank charges that you may have. Interest paid for loans, interest only is deductible, okay? If you're paying something that's a business expense like a vehicle, well, that expense is deductible. But I just want to on this line, I talked about equipment earlier, but on this line specifically, interest paid for loans, credit cards, or business mortgages. You're buying and building for your business. That is tax deductible. Yes, ma'am.
So how do you do the paid interest if you have like a private lender or something where you're just paying them back? Would your accountant do something like that for you?
So I would, if you don't, I would talk to an accountant or tax preparer and talk to them about what the agreements were. If you're going to, if you borrowed this amount of money, but you're going to pay another amount back to them, that difference is technically interest. Okay, so whether you pay that on a monthly basis to Ford Motor Credit Company, or you pay a fixed interest to your uncle who loaned you money, it's still deductible.
So how do you document that for taxes?
You would just, in the transaction or whatever software that you use, or if you use Excel or you use ledgers, you would just note that of this $500, $100 was interest, $400 was principal payment.
And does that person have to give me like their social security, anything like that, for my taxes to show who it came from?
Not necessarily, but I definitely recommend it.
If you're gonna pay interest to Ford Motor Credit, to the bank for your mortgage, that's great, but if you're gonna pay it to an individual like your uncle, he's required to include on his tax return, but you're required to give him a 1099.
You're required to
So
report
then
it.
You would give him a W-9 to fill out saying, oh yeah, this is my correct tax number, I swear and attest. And you would issue the 1099 in the proper amount to that social
So the
security
1099
number.
would include just the interest part of that?
Yes, that's the only thing that's taxable to him is the interest. Where, from his point of view, the principal is just what he paid out to you. He got back what he gave you, right? And you're paying him for the time that you had the money out. So that's the distinction. If you're not in the trade or business of lending money.
Yes, and the form in this instance is not 1099 NEC, it's 1099 interest that you would send to your INT that you would send to your uncle. Okay. And then of course commissions paid. Got a guy selling for me. You know, he gets 5% of whatever he sells. That's the 5% that I pay him is tax deductible. And then of course I said this earlier, legal and professional services, consulting, fees paid for collecting accounts, trying to go after bad debts, all of those things are tax deductible. Licenses, license renewals. If you have to get you're a driver, you have to get a CDL license, or you have to have special training, or you have to be...
HVAC license.
Huh?
Your HVAC license.
Yes, that's exactly right, HVAC. Any type of certification, continuing education, deductible. Any rental of equipment, warehouses, offices, or premises, including if you need to store your tractor on someone's lot because you have no other place to park it, or your 18-wheeler, though you can't park in the city. That's another story. I don't know how many calls I got from anyway, never mind. Any online software and services, shipping, handling, postal services, subscriptions and memberships that are business related are deductible. Cleaning and maintenance services for the business, office expenses, equipment, computers, printers, etc., supplies, and of course utilities, electricity, water, gas, telephone, internet, and streaming. This is the one that people forget about. In my office, I have a TV up in front of me because I'm a TV junkie. So I like to stream stuff, and I like to watch stuff while I work. I like background noise. It helps me kind of focus a little bit better. So all my services that I stream at my office, different from my house, I deduct. Safety equipment, glasses, gloves, helmets, uniforms, and cleaning costs. This is a big one. A lot of people will, as a tax preparer, will bring me their dry cleaning bills, thinking that they can deduct their dry cleaning. No, you can't, unless you have a uniform that requires that dry cleaning. If you're just getting, like, for example, I wear suits, I wear coats, I cannot deduct my dry cleaning because this is not technically a uniform. Even though I have to wear this, it's not overalls or, you know, a hazmat suit or whatever uniform it is that you're required. Work clothes, including shoes and overalls, are deductible if you spend them as a business owner. If you're an employee and they require you to buy steel-toe boots on your job, the IRS got rid of that. You cannot deduct that anymore. So your eyes got big. You know, they got rid of that. They got rid of a lot of stuff. Your cell phone you can deduct if it's for business. Repairs and maintenance of premises, workspace, and warehouses. I think I was in there earlier. Travel expenses, hotels and meals. Here's a tip. One of the things that they changed, they used to just say, correction, hotel meals and entertainment, right? They used to say, call it travel and entertainment. They would lump it all in there. Now you got to separate it out because entertainment is no longer tax deductible. You cannot deduct.
Client or something, take the client out.
You cannot deduct. Used to, you could take your client to the Cowboys game and that would be deductible. No longer. You cannot do that. Hotel and meals, it's usually good to try to separate those out as well. Reason why is because meals are deducted at a different rate. If you're a truck driver and you're driving to different spots, and I like how this is my truck driver. If you're a truck driver and you're going to different locations and you're required to eat, that's deductible at 80%. However, if I take you to, because I want your business and I want to get you as my client and I take you to lunch, that's 50% deductible.
For this year though, it's 100%, is it? For
This year meaning?
2021?
Not that I'm aware of. Yeah. And then of course conventions and trade shows that you participate in to grow your business are all deductible as well. Gifts for clients, they are you're limited 25 deductible limit for each gift for each person. Use of the home as an office, you can deduct it. You would take your square foot of your workplace and you would divide the square foot of your house. That gives you a ratio and you're able to multiply that ratio by all of your utility bills and what you use, including your rent and or mortgage.
So I need to divide that, or the computer gonna do that?
Everyone else in the room, the computer, you have to divide. No, you're a tax preparer, your accountant should be able to do that. And again, it's real simple. There's two ways to do it. Actually, there's the simplified method, which limits you to $300. Excuse me.
Square feet.
300 square feet at $5, it's $1,500. Or you can do actual, which is what I recommend to most people. And you take the actual square foot of your workspace and the square foot of your domicile, and that's what you deduct. So if you live in an apartment and you're a one-bedroom apartment and you do all your work in your living room, I would say that you would want to consider your living room as the square footage that you want to deduct.
It has to be used exclusively for business.
That's
Remember?
true.
That's right.
Yeah, so the kids are, you know,
No toys.
gonna be at the kitchen table, you use the living room, but it's not exclusive.
Yes.
Yeah, and so be really careful with that because that can be beneficial, but it can blow up in your face.
Yes, yes. And that is the result of possibly an audit by the IRS.
You know, sometimes they look at a tax return and they know it's just not real.
Well, you know, what they do is they have actual numbers. So if you live in Fort Worth, Dallas, then your utilities should be between this range. When if you live in Midland, Texas, it should be this range. And if you live in Stanton, it should be this range. So they have that, and if you go above it, it could trigger an audit.
But don't worry about an audit, just keep your stuff straight.
Yes, that's the best way. We're going to talk about that a little bit later. Continuing education and trainings, we talked about that earlier. Any donations, This is interesting because used to, on a Schedule A, which is for not businesses, it's for individuals and families, people would deduct charitable donations. But now they've made the standard deduction so high that the tithes that you pay at church, you might not actually get to deduct because you take the greater of the standard deduction or whatever you actually are going to deduct. Itemized is what it's called. And so the standard deduction for individuals, $12,000, $24,000 for a couple. I don't know too many people, average people who are contributing more than $24,000 in donations. So they got rid of that on the schedule, well, they didn't get rid of it. They made it more difficult to deduct on the Schedule A. However, as a business owner on a Schedule C, you can deduct donations. They left it there, which is interesting. So instead of giving as a person, your business can support that volleyball team if that volleyball team is a 501.
Without the bracket?
Huh?
Without the bracket, like the whatever you call the limit, like for a family, you need to donate about 12,000 to be able to, pay the
Yes.
tax.
So
But for businesses, any amount.
that's correct. It's crazy. I tell people all the time, this is why you should be business owners. The tax code is not written for individuals, it's written for businesses.
But who wrote it? Keep going.
Right, so Schedule A has like 35 or 36 different things you can deduct, whereas Schedule C, Schedule C for businesses has 35, 36 things you can deduct, whereas on the Schedule A, there's only 9 of them, and most people don't ever get to use any of those at all. So it's great that you guys are becoming business owners. And then, of course, losses. Any losses that you have are deductible due to theft, accident, natural disaster, damage, those are deductible as well. All right, how to keep record,
I'm ready.
okay,
Okay,
because I just got one slide, but you
Go
go
for
right
it.
here. Well, let me do my one slide and then you just do cleanup.
okay, that's good. I'm used to
Go,
clean up, man.
go.
Right there?
Yes, so how to keep proper accounting records. 1, use a business bank account. Even if you're a sole proprietor, do not use the same account for business and personal. Just get another account. Banks are just dying to open up accounts. Humor them. Get another account. Keep your personal separate from your business. There's lots of reasons why. I won't go into now, but trust me on that one. Keep records, books of income and expenses for tax purposes. Doesn't matter how you do it as long as you do it. Whether you're using an app on your phone, or you're using an Excel spreadsheet, or you're using QuickBooks software, keep track of it. Books can be, like I said, manual notebooks or regular books, computer programs, Excel, Word, or accounting software, QuickBooks or Quicken. Next one. Save all income receipts, invoices, service receipts, etc., expenses, bank statements for 3 years from the due dates of taxes. And here is my love tip, which is what you were suggesting, sir, earlier at the beginning of this, which is scan. I scan everything and I keep it, and I just don't keep it for 3 years. They recommend 3 years because you can go back, actually the IRS can go back 7 years.
The IRS can only go back further than 3 years if they have evidence of fraud. Evidence,
Right.
fraud.
Right,
Not
right.
mistakes, not negligence.
Right.
Evidence, not, oh, I think this guy is cheating. If I just go back a little further, I'll find it, man. That's not lying.
They have to have evidence.
Evidence.
Right, so-
Something that would convince a judge
Right.
that they can go back further.
Which is why I recommend you actually, because who knows what will convince a judge to look into your stuff. So I keep everything. God rest my heart, so my mama did taxes for years. I have tax returns for people back to 1981. Scanned. Because you never know what's going to happen and what's going to come up. And then as a tax preparer, I told you earlier the IRS moves extremely slow, and I'm going to shut up and sit down so you can take over.
That's fine.
The IRS moves extremely slow. And it never fails that the IRS brings, a client brings something to me that has happened to them 3 or 4 years ago that the IRS is wanting, well, actually 3 years, that they're wanting more information on. And they've gotten rid of all of their stuff. Well, guess what? As their tax preparer, I scan all their stuff. The W-2s they bring me, their tax returns, little receipts, I have it all. So definitely recommend you save your business receipts, save them for the long term. And if they're in the cloud, you don't really have to delete them or get rid of them. You can just keep them.
Okay, I was supposed to speak about books and records. So, the first thing I'll tell you is we don't expect you to have a library at your home or anywhere else. What you have to keep is records that prove, just like doing an essay in English, man, who, what, where, when, and why, those same old 5 W's, and because we're talking about money, how much? And so, if you're a welder and you've got a receipt from Air Gas, everybody in the world should know that was a business expense, yes? You know, if you're not a welder but someone else, that Air Gas receipt might require a little note on it. So those are the elements that have to be documented, and really it's just common sense. You have to document income, expense, gains, and losses. So John just talked about clients coming back after years and years. Well, I've seen where people have a piece of business equipment or a piece of business property. They've long since destroyed the record of what they paid for it when they put it into service, and now they've sold it for a bunch of money. And you don't have to pay tax on what you paid for it originally, but you've got to pay tax on the gain. And it's up to you to establish what you paid for it and how much basis you have in it.
Because you don't want the IRS to do that.
Well, they're not generous if you're going to make them work that hard, right? And there are lots of other people that want their time and attention, so just don't go there. Just protect yourself. And you don't have to keep the records forever. Records can be very simple. I audited a truck driver once, okay? Very, very meticulous man. He had one of these plastic covers that you use inside of a binder, and he would put every receipt for the whole week, staple it to the outside, and write the total business expense for the week. What went wrong was that he didn't total them up at the end of the year, and he didn't ever file his tax return. And so, yes, he had good records, but records are only as good as the information they will give you. And I guess that's a good place to lead into topic number 2, how to deal with the IRS.
She's retired from the IRS. She forgot to tell you all that.
Oh, you didn't cover that in your...
I didn't.
Oh, yes, I worked for the IRS for 34 and a half years, man. Most of it spent auditing business tax returns. It was an interesting job because you went to all these little towns around. You got to look at all kinds of businesses. I think one of my training cases was a maker of cement vaults for cemeteries. So certainly I saw a variety of things. And you could keep something as simple as receipts stapled together with an adding machine tape on top. You can keep something like the digital system. You scan it into an app, and you can buy apps that will sort them for you. You don't even have to do that. You say if it's D&K, it's gas, it goes under truck expense. You could get something like QuickBooks. If you could, sit down and make the entries, that's good. Choose what works for you. If you're the guy that stuffs your receipts into the glove compartment in your truck and pulls them out about once a year, you're the one that should be scanning them into your phone right away. Is there anyone here who does not have a cell phone? A smartphone? Ah, that's what I thought. So look at what you do in other areas of your life and choose a system of record keeping that you can keep up with that takes the least amount of time in your opinion. and they will give you the information that you need. Now, John talked about bad debts. How do you feel when you have to chase a customer down for money? Are you feeling very gracious towards them? That's how the IRS is too. They don't feel at all gracious. They're not going to cut you any slack. So the first thing to do is file what you're supposed to on time. Money is a second issue. File it on time. You can always negotiate for payment. You can
File the report.
And if you're doing like 1099s and it says these must be filed electronically, don't mail them and say they'll have to get over it. That was my dad. Don't do that. That's a mistake. They'll say, no, this doesn't count as being filed. And so they'll be looking to you for penalty as well as whatever else you owed them. So, number one, deal with them the way you would want someone to deal with you. Be on time, make payment arrangements when necessary. IRS.gov, they have all kinds of publications about business expenses. A lot of them are in Spanish. However, they used to be translated by the University of Puerto Rico. So if the Spanish seems a little off to you, just don't sweat it.
I did not. See, you learn something new every day. I did not know that.
Oh, it's in fine print on the cover. University of Puerto Rico. Translation provided by, I'm sure it's a project for the students.
Okay, so I'm sorry. Good. I'm sorry.
Well, who knows, maybe they bid on it. And so those publications are there. If you want information about what you need to file as far as 1099s go, you type that in for your search term, it will bring up a list of topics. If you want to know when different things are due, ask for a tax calendar. What I would suggest is to follow John's advice, especially starting out. In the first year or two, a knowledgeable tax person to guide you and get you started good is very helpful. It's so much easier to do it right ahead of time than to come back and repair damages later.
I make more money correcting mistakes than I do doing it right the first time. So
That's true. And I think I'm almost up. I'm not sure which of us is going to do estimated taxes.
it doesn't matter, but I've got slides for it.
Okay, if you wish. And I will say, I don't think John came back from Austin voluntarily. I've met his mama, I've worked with his mama, and I don't think that was an independent choice.
So I have no comment about that. But what I will
It shows
say,
how smart he is.
I like to make it really, 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 really easy for my clients. So yes, consult a tax preparer or an accountant, a bookkeeper. I happen to know a good one if you need one. But I like to make it easy, and what I tell my clients is obviously get a separate bank account, but if you either use a debit card or write checks, then you don't have to ever keep a receipt. The IRS has deemed that transactions on a bank statement are valid proof of whatever business it is that you did.
So what if you can't remember what you bought?
This is why I say keep a separate bank account. If you've got a business account and you're only using it for business, then everything in that business account is business. So on the bank statement, it will say, you know, Texaco Gas or Home Depot Supplies. It won't say supplies, but you'll know what it is, and you'll have a conversation with your bookkeeper, or if you do it yourself, you'll be able to code that according to what it is.
So I don't have to keep the receipts.
You do not have to keep receipts if you do what I say.
Okay.
If you spend cash, that is when you need a receipt, because cash has no way to trace it. You need a receipt. You need to be able to say that I paid that guy $5,000 to paint, you know, my office, and I paid him in cash. You need to be able to have proof and have a receipt of that. So that's why I do everything with debit or check, and that way I don't have to run around and have all these receipts. Plus, your bookkeeper will love you, your accountant will love you. Incidentally, while I'm on the topic, bookkeeper and accounting, two different terms. Bookkeeping is the actual data entry, entering the stuff into either Excel, QuickBooks, or Quicken. Accounting is making sense of that data. Nowadays, bookkeepers are going by the wayside. Why? Because you don't need to pay someone to enter data. If you do what I say and only use your debit card and checks, then you can download what's called a QBO file or a Excel file, whatever you're using. You can download that and import it into your software, thus saving you money of paying someone to actually enter the data for you. Saves a lot of money. Yes, sir.
So a bookkeeper doesn't even have to be a CPA?
Accountant doesn't have to be a CPA.
No?
I'm not a CPA. CPA is a designation that the state authorizes that says you've gone through special training in accounting.
And
That's-
pass the test.
And pass the test.
And did a 2-year apprenticeship.
And do continuing education. That's right. I'm like, no thank you. Right? I can do the exact same thing as an accountant, give you the exact same level of service. It's just I don't have CPA behind my name. Incidentally, you pay for the CPA behind a person's name.
And John, may I point
Yes,
out,
please.
if you are a person with a lot of property and great wealth, a CPA can help keep
Yes.
you from going astray somewhere and putting your other stuff at risk. Your typical small business person doesn't have all of this assets, all of this stuff to worry about. You might want to do something to protect yourself from liability. That's where an LLC comes in. And that's where a knowledgeable tax preparer can give you advice as to the formation of your business. But you may not need a CPA starting out. You may not need a CPA till you make your first $5 million, who knows? So, no, John's not suddenly gonna start handling Exxon's accounting for them. But John is an important resource person for all the people who cannot afford, who don't need that level of sophistication that Exxon does.
The other reason why you want to keep a separate bank account is because if you do happen to have an LLC, again, I don't give legal advice, but I'm just going to tell you what I know, which is there's a thing called piercing the corporate veil, right? Most people get an LLC because they want to protect themselves. If something happens and my business goes bad or something, I don't want them to come and take my personal assets. Or the other way around. I've done something, I got a DWI and I ran over somebody, I don't want them to come and try to take my business, right? That's the reason why most people do it. However, a good lawyer will eviscerate that and say that you and the business are one and the same if you are spending personal expenses out of the business. Okay, I'm going to repeat that because this is a mistake that, you know, I told you guys earlier, pay yourself. It's very important. Keep separate bank accounts. If you are dipping into your business account because, oh man, I've got to pay this, right? Don't. Do not do that. It's a simple, easy step is take that money that you're going to take out of the bank account and don't pay your personal light bill, or like one of my clients used to go to Victoria's Secret. It's hard to write off Victoria's Secret as a business expense. You can't do it. Yes. I lost my train of thought, but you do not want to do that. Victoria's Secret just made everything leave. But yeah, you do not want to, it's called commingling funds. You do not want to have personal mixed with business because a good lawyer will come and say, aha, see, they're treating the business as if it's their own personal account, therefore we should be able to take all their money. Okay? Very important.
I have a question for that. What if you're just you're self-employed, but you work for a company? That's what I do. So I don't have a business.
So if you're self-employed and you're working for a company, like it's an independent contractor, I still recommend you get a separate business account.
Really?
Yes.
Okay.
Just keep it simple. Just
Yeah.
just take the extra step, put that money over there in that account, and then if you need something personal, it's as simple as just transferring it over, and then your bookkeeper, yourself, your accountant, whomever can code that as a bunch of different things, a dividend payment, a loan. There's a lot of different ways that you can get money from here to here. But when you take out of the business and do it, and that's what the transaction shows, that's a bad move. Okay? Yes, sir.
I was gonna say, when you're shopping for accounting businesses to use or an accounting firm or anything like that, how important is it that they're designated as a fiduciary?
So being designated as a fiduciary is a specific special designation. CPAs are automatically designated as fiduciaries. Most accountants or bookkeepers are not, unless they join an organization and get designated as such. However, myself as a wealth management advisor with securities license, I am a fiduciary. Fiduciary means basically that I take on the role of doing what's best for you and your company, as opposed to me and my own interests. Okay? So definitely it's an advantage to have that, but it's not required, and sometimes it may not even be necessary. You want to establish, really more than anything, trust with the person that you're doing business with. And so if you've got a good level of trust with that person, I think it'll be okay, because I'll tell you, there's CPAs who've stolen from people, and they have fiduciaries responsibilities. So just because you have the designation doesn't mean that everything is going to be okay. So the 2021 taxes are due on April 15 of 2022. We're getting ready to get geared up for the new tax season. Therefore, these records and accounting statements should be kept until April 15 of 2025. Okay? 22, 25, 3 years. This is very important in case your taxes are selected for an audit. During an audit, you must provide all accounting records and receipts, right? The IRS is going to say, hey, send us your stuff, and if you don't, and you make them subpoena your bank and all of that stuff, they're really not going to be willing to work with you at all. So
Well, they're not gonna be cutting you any slack.
cutting you any slack, yeah. Other tips for tax saving: transportation equipment expenses, trucks, and cars. So total all receipts from expenses, diesel or gasoline, parts, maintenance, tires, and etc. All of that is deductible. To track mileage, you can use many different apps on your cell phone. For example, there's MileIQ, Sherpa Share, TripLog, Hurdler, Everlance. Or you can keep the records of mileage books that you can get at an Office Depot or Staples or something like that. Here's a tip. IRS will allow you to either deduct mileage or actual expenses. Okay, it's one or the other. Actual expenses require you to find your actual expenses, totaling up your gas, totaling up your oil changes and all that stuff. If you've got a software program, that would be easy to do. If you don't have a software program, it's a little bit more challenging. But what I have learned from my mom and through tax experience is that in West Texas, because we drive so much, right, we're kind of far from everything and we drive a lot, mileage tends to usually work better. What I do for my clients is I'll do both actually and see which one is most advantageous to them, and then that's the one that we go with. But usually in West Texas, it's mileage. If the vehicle's financed, the total sum of the interest paid during the fiscal year is deductible. For deducting the value of the vehicle or equipment, you must keep the purchase contract, the purchase receipt, bill of sale, and give these documents to your tax preparer, and then that's where they will be able to take that big ticket item and depreciate it, spread the costs over many years depending on what the IRS will allow you. I think vehicles are 5 years, domiciles, buildings are 27.5. You can pretty much depreciate any asset except land. You cannot depreciate land. Yeah, it's crazy, I know. Office expenses, keep records. So same thing with all of these. You want to keep You want to keep receipts of your office expense, total them for the year. Office equipment, keep the receipts for the IRS. Your tax preparer may request them, okay? Cell phones, it's best to have a business cell phone exclusive for work. Rentals and lease expenses, keep the contract and total expenses annually, all your rentals and your leases. Same thing with supplies, keep your receipts and total expenses annually. Again, that's if you're operating receipts. If you're doing bank statements, it makes it a whole lot easier. Report that stuff, separate it out, bam, you've got it. Or just go on your bank statements and highlight, you know, what's business and what's a expense in these various categories. However you want to do it, I like to do it the easy way, and that's why I use technology. Travel, meal, and expenses, same thing. They have to be for business activity. You want to keep separate receipts for travel and meals and total them annually, or separate them in your software. Business use of home expenses, publication 587. I put the publication there because I would imagine that most of you are going to be operating your businesses out of your home. Very important that you at least glance at this so you'll know what you can and cannot do. Publication 587. If your gross income from the business use of your home equals or exceeds your total business expense, then you can deduct all of them, right? So let me give you an example. I don't know if the next screen shows an example. This is what I was saying earlier about the simplified method. It's 300 square feet or 1,500. Let's say that your business generated $10,000 in income, but through deductions, right, expenses, supplies, transportation, vehicles, it comes down to $13,000. Okay, so obviously you have a business loss. 10,000 minus 13,000 is a $3,000 business loss. And you worked out of your home. You want to use the expenses of what you pay for personally as business expense. Take your work area, divide it by your house, and that's the ratio that you are able to deduct. However, if you have a negative income, you cannot deduct business use of home. Good thing the IRS will let you carry it forward, which is you can take that and carry it over next year, and if you make more money next year, then you can deduct that from it next year, okay? But you can only deduct business use of home if there's still a profit left. So in that flip, if I flip it around, we made $13,000, we had $10,000 in expenses, $3,000 in profit, then from that $3,000 I can deduct only up to the $3,000 or up to what my profit is, the amount of my business use of home. Alrighty, so estimated taxes, I've got some slides, but...
Well, the first thing I was going to point out is if you're a sole proprietor, you're going to have two components when you make an estimate. The first will be the payroll tax component, self-employment tax, and the other will be income tax. So you're kind of into doing two parallel calculations. And I was going to say, don't try to write anything down. Listen to see what the process is. And then you can decide if it's something you want to attempt yourself, if you have tax software that would help you to do this, or if maybe it's time to yell, help.
I got a guy who every year, it never fails, he does his taxes by hand. And he'll go down to the IRS, get the forms, and he'll fill them in pencil. He'll do everything by hand, and he gets to the depreciation point, and then he stops because he can't figure it out. And then he brings it to me, and I charge him a whole lot of money. Estimated taxes are payments made throughout the year, usually quarterly, by small businesses or self-employed workers using the form 1040-ES. Estimated payments are based on the following example. Your total revenues minus your total expenses is your profit. That's the amount used to determine the estimated tax payment for the period calculated quarterly. So whatever you made from January through March, minus your expenses from January through March, is your profit for that first quarter. That's what you're going to base your estimated taxes on it. So what Lyndon was talking about is there's kind of two calculations. And really what you're doing is since you're the business owner, you are responsible for both the business's contribution to payroll taxes and the employee's contribution, right? So when you get, if you ever worked your job and you've got taxes withheld, right? You had your federal withholding, and then you had 7.65. 7.65 was withheld for FICA and Medicare, Social Security and Medicare. That was withheld from your check. What you may not realize is that your employer also had that 7.65 as well, that he had to pay Social Security and Medicare on your behalf. And the two together makes 15.3. And that's the self-employment rate. Because you have to play you as the employer have to pay it, and then you as the employee have to pay it on your profit. Okay, now this is a little bit this different from what I was talking about, paying yourself a paycheck. But that's one of the advantages of paying yourself a paycheck, because if you pay yourself a paycheck, it's not considered profit. Therefore, you don't have to pay self-employment taxes on it. Okay? January through March, you want to pay your estimates by the 15th. It's usually the month following the quarter on the 15th that you want to pay your estimated taxes. If you do not pay your estimated taxes, the IRS is going to ask you why. And there's only a few reasons that they allow that they'll say, okay, no problem. Otherwise, they're going to penalize you. And it happens all the time. And so that's what I was referring to when Alfredo said that got the 1099, now they want me to pay taxes on all of this money, right? Well, guess what? Not only are they going to want you to pay the taxes on it, they're going to penalize you because you didn't pay self-employment taxes. You didn't pay quarterly estimated taxes.
On the other hand, do not let that stress you, because the rate of penalty is just what the current interest rate is. So their position is, if you had borrowed this money from us, we would be charging you so much interest, and that's what the amount of penalty is.
Aren't they
So it's
sweet?
not a huge sum.
Isn't that nice of them, though?
Well, I don't know, but it's better than having them come right out at the first plot, huh?
Yeah. Business resources in the city of Midland. Of course, one of the sponsors is the Hispanic Chamber of Commerce, with their number there. Midland College Business and Economic Development Center, right here. Leticia can help you with that. The IRS. Oh, Lord have mercy.
I have no one left at the office.
So, close your ears later, because I'm going to talk about the
I'll
IRS.
step out for just a minute. How's that?
So,
I'll just stand.
y'all, the IRS, I tell people this all the time, the IRS is like the Titanic. They really are. They're just a big ship, and it just takes them a real long time to start turning that to get anything accomplished. That has been compounded by two things. 5 or 6 years ago, I can't remember, maybe even longer, IRS had a strike. And a lot of the senior IRS officials just said, screw it, we're not coming back. And so you got a lot of people there who are just not as good as some of the senior people who used to be there.
But there are still 7 million returns from last year that have not been processed, much less the current year. And that's one reason why it may take so long to get a notice of a math error. And nobody wants to pay. You know, Congress doesn't want to let money loose for more people, so I guess we'll have to live with that inconvenience.
And that is the second reason why the IRS is struggling, because the Republican Congress, when it was in charge, cut IRS funding. They tried to decimate and cripple the IRS, and they did a pretty good job of it. So if you get a tax return, you're wondering why your tax return is late, or you're doing an offer and compromise, or even amendments. Blew my mind. Client wanted to know what was going on with their amendment, so we got on the phone, talked to the IRS, finally got an incidentally, if you ever want to call the IRS, Wednesday mornings at 8 o'clock, you're going to be on hold for at least an hour and a half minimum to talk to a human.
They're at 4 a.m. on Tuesday.
Oh, It is a nightmare. I called and they said that it normally takes them 6 to 8 weeks to do an amended return. It's now taking them 9 to 12 months. I had a client come reach me in April or March of this year for something that happened in 2018. The IRS just caught wind of it. He sold a house, and the title company took their time in sending the report of the sale of the house to the IRS. The IRS got it, and it took them 3 years to come back to that man and say, okay, you sold this house for $300,000, you owe us $187,000 in taxes. Yes, yes, his reaction was a little bit more demonstrative than yours was, but needless to say, it took them 3 years, which is why you want to keep your stuff, because they're the Titanic. They move extremely slow. Needless to say, we got him straight. We went back and I had him go and get his bank stuff and all this, because he didn't have any of that. He had to go to his banks and get statements and try to track down the sale of the purchase and how he paid this guy to, redo the windows or whatever it was. He had to find all that stuff. We submitted it and sent it to the IRS. One more horror story. Client and my mom were working with, switched over from a sole proprietor because it was killing him to an LLC, and we did it in mid-year. Mistake. So for the first, let's say 6 months, he was a sole proprietor. For the last 6 months, he was an LLC. And the IRS kept coming back and saying, okay, on this tax ID number, we don't have these payroll taxes. They're missing. I wrote them a beautiful letter. I sent copies of the 6 months payrolls for sole proprietor, the 6 months for LLC, documented. I sent them, it was like 87 pages, certified it, sent it to them. They came back about 6 months later with the same thing. Same letter, same request. What is going on? You owe X, Y, and Z. So I copied all of that I did, because I scanned everything, printed it out, and attached another letter on top of it and sent that certified. Didn't work. IRS called, which is very, very rare that the IRS calls. If you get a call from an IRS agent, first of all, and somebody saying they're an IRS agent, be suspicious, because they don't do that very often. But in this case, they called, and I got on the phone with the woman. I said, ma'am, look, and I certify everything, so I gave her the certificate so she could go and track it down. Here's the first letter that I sent you with the documentation. Here's the second letter that I sent you with the documentation. And basically what's going on is the guy stopped that business and started the LLC. She was like, oh. And it was done. Solved it just like that. So that's the experience that sometimes you get with the IRS, which is important, why you want to document what you do as a business. Yes, ma'am. So
if you're trying to go from a DBA to an LLC, should you do it in January?
No, I wouldn't let the IRS control me. If I were you, what I would say is document it. You can make your switch. Just understand that they are the Titanic and they are slow moving, and if anything pops up, make sure you have your records. As a matter of fact, this is something that I think my mom may have learned it from you. I'm not sure, or may have experienced with you, but tell me if I'm wrong. There are two responses that the IRS has when they want to audit you. First is, your books are in such a shambles, they're going to look at it and they're going to say, we're not even going to mess with this. This is what we're going to say happens. And then they're going to tell you, based on numbers, actuaries, what they historically has happened, they're gonna just say, this is what it is and this is what you have to pay. Right?
Another
Or,
thing they can do is give you an inadequate records notice.
Yes.
And tell you in what way your records are deficient, or your system of records is deficient, give you a period of time to correct it, and then you have to say to them, this is what I have done to fix this problem, so I can file an accurate tax return in the future.
right, what I was saying earlier, which is they'll just make the decision for you, and you do not want that. If you don't follow what she is telling you and try to get your stuff together. The other response is your stuff is so immaculate, so organized and documented, they're gonna look at it and they're just gonna, oh, well, nothing here. Thank you very much. You have my card. If you have any questions, feel free to call me. If you need a accountant, feel free to call me. I'll do whatever I can to help you, give you good business advice, and make sure, try to help you succeed in any way that I can.
Thank you.